Fintech, more so than other sectors, is about relationship. Partially, when money is on the table, then that means there's emotions not too far behind. I think we could boil the ocean on money movement and KYB, and that's all kind of nonsense.
Welcome to The Edge for Tomorrow. I'm Tracy Windsor, your host, and today I'm joined by Dave Silverstein, founder and CEO of Ned. Dave, thanks
so
so
much for
being
having
here.
me. Yeah, it's great to be here. Thank you.
I like to dive into the hard questions.
Go for it. Shoot.
What made you want to become a founder?
I don't think I'm naturally predisposed to be one. I think it is kind of the funny thing. I mean, if I'm looking at the kind of through line of my own career, I'm more of an operator of businesses, and really always had been. But when push came to shove, I think the time and circumstance of the world when I really started focusing on what has now become Ned really pushed me to go beyond what was otherwise my own comfort zone. And so Ned was founded in the pandemic. I had kind of seen a market failure from afar, just given prior roles. At the time, I had felt very strongly that there was a real disconnect in small business lending. The economy, as I had seen it, was moving very much to cash flow, away from traditional, credit or collateral, which had been the driving force of small business lending. But ultimately, as a New Yorker, I'm here in New York City, when the pandemic hit, at the time I was probably 34 or so, it really forced me to reckon with, what I wanted to do with my life. And, when there is such a cataclysmic set of circumstances, taking hold in a city, like New York, it forced me to kind of reckon with mortality. I was watching as folks were getting sick. I was watching folks that were, plagued by something really intense. And I kind of really realigned my own agenda around what I wanted for myself. And frankly, at the time, I made a decision, if I don't do something for myself at this moment in time, I will never do it. I am restless, but it was more, being in kind of my mid 30s or approaching my mid 30s and realizing if I don't kind of take a leap and build something that was through my own perspective with my own agenda at hand, I would maybe never get a chance again to do so. And it was also at the time kind of a moment where folks were taking risks in a moment of such incredible chaos, risks that would have felt more risky, let's say prior to the pandemic, actually felt more of a write-off, a layup versus a 3-point shot. If it failed, then great, chalk it up and we'll go figure something else.
Right. I think that what I hear a lot about founders, about leaders, and then you also hear it especially around politicians is, those who are best to lead aren't always the ones that are so inspired to or really have that drive to lead. I love how in fintech and how you described it, so many founders are coming from, a vision or a problem, really addressing something that'll make society better. So I really appreciate that. And hearing that from you. So potentially you'll be one of the best leaders because of it.
I hope so. I mean, look, time will tell. I appreciate the encouragement, but yeah, I wouldn't say I don't come from the classic financial services industry, nor financial technology. The business problem, ultimately led me to a solution that happens to be in the fintech sector. And so, it's been a rad learning curve to take on these last couple of years, but and I'll even years from now I'll still always be learning, but I think the sector probably chose me versus the other way around, when we were first starting out.
So you talked about that phase during the beginning of COVID. It came in March 2020. You said you were kind of somewhere in 2021 when you were launching. What does conceptualizing mean for a founder?
I had always worked at growth stage businesses, small to mid cap businesses. But I do think in earnest, we really didn't like start doing stuff until kind of later in 2022. But then I think, it was just kind of having conversations with individuals and really, frankly, just asking them like questions to probe and assess whether or not like the market issue around kind of if you're a small business owner, how hard is it to really get money if you're a small business lender? How hard is it to underwrite, to deploy, to actually like facilitate a loan? Like we are lending infrastructure today, we have built out a lending platform for lenders driven by cash flow intelligence, but it actually was spawned by conversations with business owners that were otherwise with great business fundamentals. We're getting turned down for loans. We're feeling highly discouraged in a down market. We're feeling friction with lenders who are not underwriting them, in ways that they felt had merit. And like they were telling me about the experience which translated to what is now hopefully excellent technology for the lender to give ultimately borrowers an excellent experience to help lenders deploy more dollars. But it really just came down from like where was the market. I really just wanted to find the
Mm.
pulse of what was happening, right? I had like a set of hypotheses, again, words that I would not be able to say back then, but it was really just finding time with people to explain the hurt, right? Like, what is the pain point that they were feeling? And look, we went through a couple of iterations in the early days. We probably, we made a fairly hard pivot even in the first couple of months coming out of the gate. But, it's really just like allowing the market to pull me in the direction that it did. But at the end of the day, the customer is like the only thing that matters. And I still like, hold time and space to make sure like we're just delivering what our customers like actually need, not necessarily like what we believe like is the shiny thing that we should be building all the time. That's kind of core to what the ethos is of Ned today.
What you were just talking about from conceptualizing, creating, and then iterating off of that and moving forward, um, you also kind of outlined a very simple explanation of what is fintech, what is it for. So for you, you were seeing the problem, small business owners not having access to the capital that they needed. You have lenders, you have borrowers. Those borrowers could not borrow. Fintech comes in there to, what I think, kind of support the possibility of that happening, but within the context of like the greater economy, right? Is that a fair assessment?
Yeah. And I think like even taking like a couple more steps back from that, like when I think of financial technology, like the root of what like the root kind of problems that we are solving, or frankly the opportunities that we're engaging around, it's really pretty simple. It's simply for us at Ned, and I think more broadly, if you look at any or most fintech platforms or infrastructure point solutions, it's about facilitating relationships. And like, I think we could boil the ocean on, the deeper aspects of play with like money movement and KYB. And like that's all kind of nonsense to me because, when you look at really fundamentally what's happening, there is a relationship built around different levels, different levels of transaction value. Some are higher stakes than others, and those relationships where money is involved, especially in credit, right, where there's a loan, there's a lender on one side of our platform, there's a small business owner on the other. And certainly Ned is the platform in between them, facilitating a lot of different activities, cash flow, underwriting and origination, contracting, automating repayments. But like when you kind of look at it from a non-technology lens, like I am really trying to ensure that Ned is facilitating what is oftentimes a decades-long relationship with ups and downs, where where there's going to be nuances to that relationship. Sometimes there's going to be points in those relationships where it's amazing, other times where it's a little bit rougher, and there needs to be kind of a level of relationship management, which means ultimately like, fintech as like not just a sector, but as like a practice of building technology, like in my opinion, needs to be rooted in like very deep empathy and emotion for the folks that are involved. And certainly, look, like when you pay somebody back via Venmo or PayPal for like the pizza that they bought you that weekend, that is one type of relationship. For Ned, like we're helping to, facilitate, you know, multi-million dollar loans or even kind of microfinance. And there's like dreams in the balance, right? Communities and jobs and growth at a local level in the balance around those types of transactions. So, I think like when we think about the product of what we built, at the start, where we are today, where we're taking Ned, it's at the end of the day, like all we care about is that we are bringing the lender and the borrower closer together, um, and making sure like our platform can give them like the opportunity to like deepen that relationship and feel like really comfortable and confident with one another, rather than like feeling that the relationship is rooted in consternation or frustration or lack of visibility. I think fintech more so than other sectors is about relationship partially, and not partially, heavily, because when money is on the table, then that means there's emotions not too far behind, and so it's our job to just make sure that things are things are facilitated with like a extra level amount of care and sensitivity.
Yeah. Uh, that empathy that you spoke of, that's not usually, a business term that comes high on priority in traditional institutions, but it's something that can really come high on priority when it comes to fintech.
No, I was just saying for sure. I agree.
Yeah, I
All
mean,
good.
I've asked a fintech founder, why aren't banks making the solution?
And look, I think what's interesting about small business lending that I've learned is that a lot of small business lending isn't done by banks, right? And so, it's a much more diversified space, than I ever anticipated before even getting into it. And it's kind of, I am constantly amazed at who is a lender or what types of organizations
Ooh,
are actually lending money
yes.
in the United States,
Wait,
as well.
give us some of
The
the surprising ones. What are
Well, look, I mean, look, I started my career in government, in the U.S. Senate, but I would have never thought that our first customers were nonprofit lenders.
hmm.
And there is a massive sector or subsector in the small business lending market where there's about $500 billion being transacted that's really running through 501(c)(3) organizations at like local or regional levels. They're called community development financial institutions. That's just like one massive example. But also, I think when you look at like the credit market, and you kind of look at parallel trends happening in fintech where there's kind of a spectrum of embedded finance capabilities that are being built. You have like technology companies that are not lenders that are transforming into credit providers, right? Small business, excuse me, customers, potential borrowers is how they're looking at them. And so I think we're not just seeing like lending as what has always been. I think like the thesis that we're building around at Ned in particular is that every organization in the near future in some capacity is providing credit or will provide credit in the future. And even in the simplest terms, in terms of like what many companies practice today in terms of like payment terms, right? Net 15, net 30 payment terms, like that is essentially a credit product. If you kind of drag that out to a broader extreme, it's not too far away from allowing a company to deploy capital or to deploy services and to run repayments against those services. So I think like, there's lenders as they are today. And certainly like the three big categories, you have banks, credit unions, and then kind of this like mercurial sector of non-bank lenders, of which heavily is driven by nonprofits. But then you have like kind of like a separate market where there's no overlap in the Venn diagram right now, where you have future lenders. But also, I think like, the next 3 years, like when you look at kind of all dollars deployed to SMBs in the United States, there's an increasing percentage of emerging lenders that do not look like, the types of lenders that have kind of driven the sector for the last generation.
I love it. It's like first, earlier in the century, it's everybody, all companies and nonprofits became financialized, right?
Yeah,
Now we're talking about businesses and entities becoming, the lenders of credit and getting involved
sure.
in that game, and how that's kind of transitioning on a mass scale is absolutely fascinating. Paper last month and drawing on market data to understand with structural change and small business lending, and you described it as a hit list of tech requirements ultimately, right, that is needed in lending to deal with the nature of the industry today.
Yeah, I think we're coming off of like a once in a generation year in the financial services sector. And I think in every sector, it's like usual and customary in dinner table conversation. But, like whenever there's economic volatility, financial services is obviously like the first to feel it and the first to react. And over the course of the last year, you have certain externalities that are creating layers of pressure that have not really come together in the way they have before. So, for instance, you have high inflation, high interest rates over the course of the last, few years that have remained elevated. You have political gridlock as well. Fluctuating tariff policies, which have created like unique pressure, not just on businesses, but as well, lenders who are trying to figure out how to manage their portfolios. But altogether, like, you have these confluence of both economic as well as domestic externalities, geopolitical tension abroad, supply chain disruption, that are redefining, I think, the relationship between lenders and borrowers. And so, I think after 2025, what we saw at Ned in the lending industry was that the systems that small business lenders were using simply could not handle the pressure. And it revealed vulnerabilities, I think, more than ever. And most of all, where these types of kind of economic dynamics come together, it puts really real pressure on businesses' cash flow. And when businesses feel the heat around cash flow, it puts, repayments in peril, or it creates greater risk around small business lender portfolios. They were built on lagging signals. And so, if you're underwriting a business, let's say with credit or collateral, and then you're trying to manage portfolio risk, like there's really, not a sound way for most lenders to have a real time sense of how those businesses are doing, or to forecast whether or not those businesses are in trouble, or if their repayments are at risk, or if those broader portfolios are at risk. And so I think, what we wrote about in the paper is a pendulum, swinging from hindsight to foresight, where lenders are looking to bring together different technologies and capabilities to ensure that their operations are able to forecast and see ahead rather than react to kind of lagging signals and risk, and trying to mitigate reacting, after trouble has already kind of presented itself, and looking for different ways to kind of intervene early and serve their customers and really be there for them. And so, for us at Ned, it's a unique moment because ultimately what we're watching in real time is the lending sector, move to a place where they want real-time insights on how those businesses are doing, and they want to be able to connect signals across their portfolio to, you know, essentially like mitigate risk in real time and intervene. So yeah, I think what we put out is called Beyond the Breaking Point, but it doesn't just kind of like lay out the shifts that are happening, but it also kind of connects the dots between the shifts that are occurring in the economy and the lending sector to what we believe is ultimately like the must-have feature set or capability set, that lenders are asking for.